Good morning, Story Trading VIPs. We're back at it. Exciting day. Lots to talk about. Remember, it's Tuesday ahead of Thanksgiving. Markets closed on Wednesday, half day on Friday. Possibility of extreme volatility, Black Friday and beyond, like we seem to get every year. So keep all that in mind. There are FOMC minutes coming out tomorrow. I don't expect that to have a huge impact on the market. Right now, so what we're going to do today on today's show, I'm going to mix in some commentary. Every Monday night, I'm on the Wolf Financial Spaces show as a panelist with a lot of other top traders. So got some insights from that team on market sentiment, also a couple stock picks and sectors that they brought to our attention, which we're going to be talking about this morning. So first, SPY QQQ, we're still kind of stuck in this chop zone between two of the key moving averages, the 20 DMA and the 200 DMA. And I believe that's exactly the same for the QQQ as well. Now, I will tell you, sentiment-wise, a majority of the panel, and we're talking about like eight traders or so, I believe, a majority of them were bullish for a continuation move of this bear market rally to at least that 200-day moving average, 405 on SPY. That was the majority mood, the sentiment of the room. There were a couple, I was in the minority along with someone else, thinking that, hey, we could go into a very volatile period here with tax loss selling and everything going in the next month or two, and the potential for like more of an earnings bear market. So keep that in mind. So that was a sentiment. No one was really calling the lows. No one knows that right at this point. But at the least, a majority saying, hey, this is good to at least 405 on the SPY and perhaps higher on the QQQ. So good sentiment among all the players in the room. Now, this morning, we remember we lost our cheat code on TLT up this morning. Although now, today, for the first time, it's back to that old paradigm. I don't think it means anything. TLT up, UUP down, RK and Bitcoin up, right? So this is the first time we're seeing that relationship resume. I don't think there's anything to it. I think that's just chance for today in this chop zone that we have before things get back into full swing early next week. All right, a few stocks I want to bring to your attention. First is Tesla. Now, actually, someone on the show last night had a Tesla short on this. I mean, people love to be short Tesla for the last few weeks. I have a different opinion over here. For the first time, I'm actually interested in watching Tesla and may want to take a trade on it at some point. The risk rewards to me is starting to get good. And I'm looking at this from a sentiment and technical point of view. So 2 of the 4 pillars. I understand the fundamentals are expensive, but the 200-week moving average is very, very meaningful on all charts, whether it's the indices or whether it's an individual stock. So the 200-week moving average is here at $160. Now, you want to wait till it touches it. Okay, yeah, maybe, but maybe it doesn't get there, right? The risk reward gets better as you get closer to 160. I also like the RSI in the weekly chart is 33, pretty oversold. And I'm combining that with the sentiment of everyone knows the sentiment of Elon Musk, and this guy's eventually going to succeed, and Tesla's going to be huge, and everyone knows that sentiment. So despite the fact that it's fundamentally overvalued, I think those 2 pillars, sentiment and technicals, here at the 200-week moving average is something to look into. Now, 160. Now, if you go back and look, there's some additional strong support at about 155 right here before it took off here in 2020, September, third quarter of 2020. It bumped up against about 150, 155 for quite a while before it took off. So that's your other support levels. I think we're nearing support levels on Tesla. I just wanted to put that out there because, I don't talk about Tesla. I always thought Tesla's so overvalued. It's not my kind of thing. So I think it's a little bit newsworthy that I'm interested in at least starting to look at Tesla right now is something I think a little meaningful. Now, some other things. Zoom had earnings. The earnings missed, but man, this is a value play at this point. I don't see a lot of downside. Just look at the, earnings and the PE on this. This like a growth stock, it's gotten hit. And but they have cash flow, they have earnings, and this business is not going away. It's just a matter of math in terms of a value play. And I didn't take a trade on it this morning. You can see it's up from this morning 72 over here at 75. But this is interesting to keep on your radar. My daughter has 1 share of Zoom. She made me buy it a couple years ago. That's the only exposure I have to it, and I'm comfortable holding it for her long term. I think that's a good company with good cash flow that's going to continue to do well in the long term. All right, a couple other things to bring to your attention. This morning, before we get into a bunch of earnings and other catalysts, This morning, I saw unusual pre-market action in 3 stocks: Tower Semi, FREY, FREY, and GOEV. Okay, Tower Semi, you can see we're up. We know the catalyst of Warren Buffett buying shares recently. There you go. You can see that move there. So is there something behind that? Was there an upgrade? Is there some news I missed? I don't know. But this, again, has a potential to make a move to $88. I've been saying that for a few days. The gap here is 75. Other people are looking for a gap. I don't know. I think it's dependent on the market, right? The market crashes, maybe you fill that gap. But if we have anything near stability, I think we're going to be testing 88, especially if the consensus from last night is right and we have a continuation of that bear market rally. I think that's your target on TSM. FREY is one of these stocks that very often has these big pre-market moves. I had another one this morning. Let's keep our eyes peeled for news. Maybe there's an analyst upgrade out there that didn't come through the wires yet. That's possibly what's going on with FREY. Top pick from Morgan Stanley with a $60 bull case price target. GOEV was down sharply to new lows. I think it was new lows. Yep, to new lows this morning. A lot of volume, 2 million volume. So is something going on? Are they doing an offering? Something to keep an eye on. Okay, I'm not recommending this stock for today or anything like that. Just wanted to let you know, bring to your attention, there were new lows with unusual pre-market activity. We know they need financing. Something may be up there, so keep an eye on that. All right, now let's move into retail, discount retail. Well, Best Buy, not necessarily a discount, but a lot of these are discounts. So last night, one of the themes on the Wolf Financial Spaces show was discount retail. And we had talked about this last week when Walmart and Target earnings came out. And we saw Walmart doing well and Target not as well, kind of getting stuck in the middle. And so we had a bunch of earnings come out. Actually, they're not all discount. We have Dick's specialty retail, but we did have Dollar Tree come out recently. A couple days ago, we had Macy's and ROST stores. So before we had the earnings come out for Best Buy and Dollar Tree and Dick's this morning, I already had these 3 on my watch list from the last night's show: Walmart, Macy's, and ROST stores. So why do they have these on my radar? Well, because they've had good earnings, and the technicians, the technical traders in the panel, thought that these were really primed for continuation moves. And some of these charts really look good to me. Look at the best one, I think, was ROST stores. I'll show you in a second. But you can see this move here. It consolidated after this big earnings move and then started moving back up over there. Macy's above all the key moving averages, above the 200 DMA. But look at ROST stores. ROST stores, like even perhaps more impressive than Macy's in its gap up, consolidation, and then making a move back towards its highs. So this was already on my radar. Traders are already looking at this sector and saying, hey, we think Macy's, ROST stores, and Walmart are going to do really well. And because I had that knowledge, it's top traders, they're poking around, they're in this sector right now. So then I put a little more emphasis when I saw these earnings come out: Best Buy, Dollar Tree, Dick's. That means something to me, right? That means traders have a target over this sector right now for the next couple days, right? And part of their thesis is also, hey, Black Friday, it's the time of the year where everyone gets excited about numbers coming out. Now, I don't think the numbers are going to be great. There's a big risk there. But in any case, if you look at the earnings now for Best Buy, Dollar Tree, and Dick's this morning, we had diverging things coming out. Pretty much across the board, everyone beat on these 3. The difference is you see Dollar Tree is down. Dollar Tree is down because they guided for lighter margins next quarter. Okay, guided for lighter margins, even though they guided for higher revenue on the top line. That's inflation showing you right there, right? What inflation does. The sales are higher because of inflation. Things are priced higher, but also margins getting compressed. So that's the story at Dollar Tree. That's why it's down. But Best Buy and Dick's both beat and raised. And interesting, listen, I don't like, Kramer has a track record. Everyone knows his track record. That his like inverse Kramer is an inverse Kramer ETF coming up. But Kramer tends to do well in the moment, right? He has a good sense for like short term. He's been more inaccurate on long-term trends, right? Like they go back and show a video from a year ago and it's like, yeah, this is great. And it ended up being the top or something. All right. But when it comes to like short-term stuff, I just want to point out, I don't think I've ever seen Kramer come out with like morning tweets saying Best Buy is going to squeeze today and Dick's is going to squeeze today. So it drew a little more attention to both of these for me. And interesting, I found, well, Best Buy, you can see it's doing really good. It's going up. Has a small short position, 3.5%. but earnings were really good. I guess it was a big beat. You can look at the numbers over here, and you can see it's $77. It's over this resistance, or right at it, 77.48. I called out these numbers on the show in the chat room this morning. $80, I guess, is your price target there. You can see 77, big resistance, 77.87, 77.50. You see those two candles. And from there, the next one, 200 DMA, 80. So that's your target in Best Buy. But I got most interested in DICK's because this morning there was a reaction at first that didn't make sense. They beat and raised just like Best Buy did, okay? Just like Macy's and Ross stores did. Yet DICK's was down this morning, and I was looking at that with a little bit of curiosity, trying to figure out what's going on. And then that's when I saw Kramer come out and kind of validate my thinking here. Kramer's like, "Oh, DICK's is going to squeeze," and it was down like 3% at the time. I'm like, "All right, well, Kramer's seeing something I'm seeing over here." And then I looked and I saw the short position on DICK's is 24%. That's huge. So I took a position in DICK's this morning when the stock was down, not a lot. I ended up getting between 105 and 107. So like close to break even, slightly down is where I got in. And I'm happy to be in a stock at break even when they just beat and raised and it still hasn't really gone green for the day. And you see other stocks like in the same sector, again, just repeating what I'm saying, like Best Buy, Macy's, and Ross stores doing really well on earnings. So I like that. That's the trade I took this morning out of all these earnings plays. Okay. But this whole sector might be day tradable or swing tradable here for the next day or two. All right, some other news items on specific stocks. TWI, I own this, and this morning I really like this. It's an ag stock. Think of it, put it in the categories ADM. We really like ADM. And by the way, I'll talk about my two picks we put in for trade of the week in a second. But TWI this morning had a letter from the chairman of the board, a really, really nice letter. Go ahead, take a look at it. Like, it's a little bit of forecasting in here, a little bit of anecdotal evidence, a little bit of griping about, or curiosity about why the stock is 15 and not 25. A very interesting letter that's going to be good for sentiment, I believe. So take a look at TWI today. That letter might move the stock, and you can see there's a little bit of a action this morning. No, only 10 shares, so not meaningful. So you can see that resistance level here at a little bit above 16. A lot of chop up here, so it's not a beautiful chart to work with necessarily, but the fundamentals really good. The sector sentiment really good, and we have a catalyst this morning, and that's how I like to trade. Okay, XXII, we had that meeting yesterday. We learned a little bit about the history of XXII. The next step is to bring in the CEO, so we're going to be working on that. Yesterday, the stock was down very sharply because of a fire at a facility. In after hours, they put out that they have business interruption insurance in addition to the regular fire insurance. So they expect to be covered. We don't know to what extent they'll be covered. We don't know how long it will take. I think it's a reasonable fear that the market may have that is there going to be a cash flow hole. So that's why the stock was down big yesterday, but now rebounding after that PR came out. And these are probably the times to be able to buy the stock at good prices. Acknowledging there's a little bit of risk there until we figure out what's going to be going on with do they need to raise, do they not? So anyway, very interesting story last night. Now, XXII was one of two stocks I put in for the Trade of the Week competition, and we won again, even though XXII was down. Thank you, Chris Tarbert. We put Clairfeld in, so we won that competition. The average of our two picks beat out everyone else's average of two picks. So this week, what did I put in? I put in ADM and MBLY. You know the thesis about ADM yesterday. Really strong relative strength with some exciting volume on an otherwise dull market day. So that's speaking to me. Riding up the 20 DMA, I think something's happening here. You can see that volume pop clearly right there yesterday. I'm looking for an all-time high breakout in ADM. Still looking for that. MBLY didn't get the move we wanted yesterday with all of the price targets that came out. I'm going to write it off to sell the news. People knew I was not as on top of in terms of when the analysts can come out and give their price targets. Obviously, there was a window where there was a quiet period, and they all came out yesterday with very big price targets. So I'm hoping that this can rebound after yesterday's sell-off. And I added it in because of the sentiment from the panelists. A majority of them felt that very strongly that this bear market rally will continue to the 200 DMA on the SPY. So I'm like, well, if that's the case, Mobileye should do well here. Mobileye should go up with the tech stocks on a continued bear market rally. So that's why I put in these two stocks here, ADM and Mobileye. Now, from yesterday, we're following up still on YTRA. I'm keeping the thesis on this, looking for a $3 breakout based on the research coming from Matt Kolb from MSpark Capital, a member of our community, is looking for $4 to $5 eventually as this IPOs in India over the next month or two. $3 is the level you need to break for a nice little breakout. And let's see if we can find some support levels here. If we're not in yet, where can we see support? I don't know. See, this is very high volume move. I'm not sure this is coming back anywhere to cheap prices. I don't know. I say just buy the dips, 270, 260. If you trust the research from Matt, and I do, so that's something I'm swinging for a breakout over 3 and towards 4. CTMX pulled back, didn't go straight up, still looking for 2. It doesn't always go straight up. I don't see a thesis here to say that's the end of this run. You know, we had a similar technical setup in DRIO, and it didn't reach it. You see, it broke the lower DMA, now going to 200. I had a 570 target, and I ended up selling my trading shares at 545. And I don't know, maybe it's not going to reach that 200 DMA. Maybe the play is now to bounce off the 50 for the next move up. But really, it's going to take a catalyst to get this above the 200 DMA. I provided some insights into DRIO yesterday in the VIP research room. Take a look at that. That'll give you a real good understanding of why the stock is trading where it is and how the stock is likely to play out over time, depending on the timing and emergence of certain catalysts, whether they happen, whether they don't happen, on what timing they happen. Take a look at it. I think it's going to be really valuable for you to understand the price action in DRIO. All right, we have its number. The other thing, let's continue to look at Disney. It's Ooh, nice. I like the way it consolidated and held this level here after the move up with Bob Iger. Is that his first name, Bob? CEO coming back. Iger. Yep, Bob Iger coming back. Huge monumental news. You know, it's going to be asking a lot to break over that 50 DMA at like 99.50. But if we get a continuation of this bear market rally, I think it's going to happen. Sentiment is just too good, too powerful. People love Bob Iger, and the stock has been really beaten down. And it's a solid company fundamentally. I don't know. Oh, PE 52. I'll have to look into that. That's probably, I'm sure the forward PE is lower than 52. All right. What else do we have here? Just want to point out the last one, DAIO. Well, Clearfield, I'm still looking for 125 to 128 test. And then DAIO, look, I put something out there, and I'm just listen, I think this could be DAIO, and what's the other one? QUIK, QUIK. All right. I'm going to keep repeating myself until someone champions it, does the research on this. I think there's something there in both of them. Well, I know there's something there in QUIK. QUIK, I took more time listening to the conference call in detail. I read over the transcript. I looked at the financials. I really like what's happening in QUIK. But DAIO also looks very promising. But listen, I have only small positions in each, and I'm waiting for someone to step it up and champion this and make a presentation to our community if they like it. And if they like it and it goes well, we'll invite the CEO. These could be like the next heir, stocks like this, right? Stocks that are inflecting to profitability, small market caps, $37 million market cap with DAIO inflecting to profitability. Same thing with QUIK. QUIK has basically already inflected to profitability. I mean, they're forecasting profitability for the next 5 quarters and growing profitability through the next 5 quarters with a market cap of 81 million. And this is the first time I believe they're flipping to that profitability. So these are the type of companies with small market caps flipping to profitability with a strong tailwind of business that can last for a long time, right? That can end up doing your 5 or 10 baggers like we saw in Air. Now, I don't know that to really be the case. I don't understand their products fully. I don't understand, you know, is this inflection in revenue a real inflection in their business and the products they're selling? These are the types, by doing some due diligence and having a conversation, getting on Zoom, talking to each other, and then inviting the CEO. So DAIO and QUIK, take a look at those. And with that, it's lots of stocks. We can't get to them all, but gave you some good ideas for this morning. Again, if you're not a VIP, you're watching the replay at 4 p.m., you've missed your opportunities for the day. So head on over to StoryTrading.com and sign up for a free trial, and you can join us for that. Our next event's going to be tomorrow, tomorrow at 4:30 p.m. on Zoom. We'll have to see. I'm traveling over the weekend, but I'll try to stick to the schedule of the Friday morning show. We'll see if we could do that. But in any case, wrap it up for today. I'm real excited about DICS. DKS, I think that's something that's going to be hopefully fun to be able to buy the dips and do some day trading with. Maybe Kramer's right. Maybe we'll get a short squeeze. And TWI, love that news. Love that letter. Take a look at that letter. Any case, guys, good luck. Thanks for joining us and have a great day.